Welcome to Assurity's Life Insurance webinar. We're happy to have you join us today. As most of you know, September is Life Insurance Awareness Month, and so we thought it would be appropriate to focus some time here today spent on our life insurance products and specifically trends that are being driven today, and hopefully sales concepts that deliver value and purpose to your clients. My name is Tim Burns. I am a senior sales manager with Assurity.
Hey, and I'm Brandon Johnson. I'm a regional wholesaler here at Assurity. I've been here about 5 years and cover the West Coast.
And we both want to thank you for investing time with us today. We're excited to talk to you more about life insurance in terms of what is going on with consumers right now, and more importantly, how you can help more people get the life insurance coverage that they need. Today, we're going to cover the trends that are creating more life insurance opportunities, sales ideas and solutions that can fit the needs of a wide range of your clients, and how our streamlined applications can help meet customer expectations and get you paid faster. And we'll also highlight some tools that you can use right now. At the end, we'll have a chance for you to ask any questions you might have. We do encourage you here throughout to go ahead and type your questions in. Brandon will help us keep an eye on that, and I will as well. And we do want to let you know this is being recorded today. The recording will be available afterwards. But again, just as a reminder, all lines are currently muted. And as you have questions, please feel free to type those in. But we will have time at the end where we address the questions. So with that, let's get started. Brandon, please.
Thanks, Tim. So to get started today, we really want to talk about some of the opportunities in the market. Obviously, this year has been a very interesting or strange year with not only life insurance, but, throughout, our everyday lives. So a lot of things have changed, but one thing we have been noticing in the market is some trends with life insurance. We want to make you aware of those. So when you're out there talking to your clients, you know what they're looking for, you know what to present to them. And also it's good to be knowledgeable about what's going on in today's market with life insurance. So first off, we did a Google search history and noticed that the trends for life insurance have really increased starting in 2020. Obviously, the year started pretty crazy, and to think back, to start the year, we had the wildfires over in Australia, which seems like that was about 6 years ago now, but that was a major thing of those wildfires over there. And then we had the crazy incident of Kobe Bryant passing away, and people really started thinking about, you're not invincible, things can happen to you. So life insurance was at the top of everyone's mind. And then COVID-19 hit, and we've really seen an increase in searches for life insurance. And not only are they searching for it, but they're also acting on it. In fact, term insurance is up this year in the industry quite a bit compared to other insurance products. So really, when people are talking about insurance, I think it's really hitting home for those middle-aged individuals, someone my age, 30 to 40 years old, think about life insurance, where before maybe they weren't thinking about it near as much because, life insurance really wasn't as important as they, needed it to be. So with everything going on, we've really seen an increase in that. In fact, in the U.S., the highest it has been for Google searches in life insurance over the last 5 years, with 100, looking at this graph here, 100 being the highest. It was way up there at 100 here in the last few months as well. So really seeing huge spikes in that. So when you're talking to your clients, you know that they're out there looking for life insurance, and it's something you want to present to them. Online life insurance searches has went up. In fact, 64% of people who have already owned life insurance are actually Googling it and buying more life insurance. So just because they have life insurance doesn't mean that they're done buying it. They've realized that they need more life insurance because of everything that's going on in the market. So heightened awareness really is increasing that and increasing the individuals buying life insurance as well. So when you're talking to your clients, you really want to mention the fact that, you want to help them meet those needs. And with our products, I think it's a great way to do that with our term. We'll talk about our term, we'll talk about our whole life, and our UL. So give them 3 options. Obviously, with term being the most popular right now because of the cost of it and the different options we have.
One other thing we want to acknowledge today is that there's definitely an uncertainty around workplace benefits Amid the unprecedented interest in life insurance, there is a lot of uncertainty. Employers are faced with layoffs, furloughs, and managing the impact of COVID-19 on their businesses and their budget. According to LIMRA's 2020 Insurance Barometer study, employers are compensating more for rising health care cost expenditures by reducing life and disability benefits. This is a trend that has been ongoing for the past 10 years. This hurts, obviously, the employees. Cost-cutting measures are forcing employers to decide between offering affordable health care or benefits like life insurance and disability coverage, which leaves many employees on their own for these individual coverages. As of August this year, there were 13.6 million unemployed Americans, of which 6.2 million were furloughed. This comes from the Bureau of Labor and Statistics. Without jobs, many people are losing their access to group life insurance or even the disability, and they're discovering the shortcomings of their plans, like non-portability or the face amount is simply not enough. COVID didn't introduce this trend, though. It's just accelerating what's been happening for years. Healthcare costs are going up annually, and they're positioned to rise by up to 10% for 2021. This is a trend that doesn't show signs of stopping in 2020 either. It will likely continue for years to come. So what we're finding is that 1 in 3 Americans say they intend to purchase life insurance. This is, again, one of these current trends. They intend to purchase life insurance. As Brandon mentioned, there is a high level of searching and this high level of interest. More than 1 in 3, so 36% of Americans intend to purchase life insurance yet this year. That's an incredible 75 million potential sales. As we mentioned earlier, 64% of current life insurance owners are considering adding more coverage. And all of this has come together to create some unique circumstances to sell more life insurance and meet those needs. So that's what we'd like to do next is talk about the solutions and how our products can help.
That's great info, Tim. And when we're talking about these products today, really not only focused on our life insurance, but Tim talked about how disability insurance, how individuals are losing disability insurance, health insurance costs is going up. We have a critical illness product that does a great job of supplementing with that as well. So really we're focused on life insurance, but remember we also have good health insurance products to help those clients' needs as well. So but first we'll talk about our term product. Obviously, very common term, 10, 15, 20, 30 year. Because of COVID restrictions, our issue ages have been lowered to max issue age of 69. On this, we can usually go up to age 75 for a 10-year and 70 for a 15-year. Because of COVID, it's a max age of 69. Hopefully, we're going to lift that here eventually once this COVID-19 does start slowing down. Face amount, one unique thing about our product, we do go down to $25,000 in death benefit. Most term insurance starts at $100,000 and up. We do go down to $25,000. So it really can help with those, individuals that are on a budget and only need a small amount of life insurance. It goes through Table 8 and non-medical limits. So we do have a instant decision underwriting system where we can go from 18 to 50, we can go up to $500,000 in death benefit, and from 51 to 65, we can go all the way up to $350,000. So it goes through our instant underwriting decision. If you do our e-application, you can actually get that decision instantly, which really helps speed up the process when you're working with your clients. It can be done, over the phone with your clients, can be done face to face, and we do accept obviously paper applications with this product as well. But I always suggest using our e-application through iPipeline. It really does help speed up that process. Underwriting classes, the nice thing, even with those non-med limits or instant decision underwriting, we can still go all the way up to Preferred Plus underwriting on that. And this product is convertible. So if they do purchase the product and later on they decide they want to do a permanent product, you can convert it over to one of our permanent products. So included riders, we do have an accelerated benefit rider included on our term, which is nice. With that, it is a terminal illness, 12 months or less to live, and a confined to a nursing home until death. So it does pay out if you are chronically ill, but you have to be confined to that nursing home until death, deemed by a medical professional. But it is a nice rider that's included in the policy, maximum of $250,000 on that. So optional riders, I won't cover all these, but we do have quite a few riders you can add to them. Some of the ones that I think are really nice are obviously our endowment benefit rider, which is return of premium. That is a pretty unique rider in today's insurance world because a lot of companies have got rid of their return of premium. We are one of the few companies that still have it on our 20 and 30-year term. Also, critical illness benefit and monthly disability income rider. Those are some living benefit riders that I think are great opportunities to talk to your clients about, especially with what Tim was talking about earlier when he was talking about individuals losing some benefits because of companies, having to lower their expenses. Lowering or changing their benefits is one way to do that. So they're going to offer less to your clients. So having that critical illness benefit rider and that disability income rider on a term product where you can wrap it all into one really is a nice package for those individuals when you're talking to them about life insurance, especially term insurance, because it's a low cost way to get them covered. And then obviously you can cover the entire family with this product, which is one of our great sales concepts is our family plan concept is you can have the child rider on it, you can have the other insured, so you can have the husband and wife on the product, and you can include different riders with them as well. So really, really strong term product, well priced, has that return of premium, and has those living benefit riders you can add to it. One thing to keep in note is those living benefit riders, the critical illness and disability, they are additional cost, but when they are activated, it does not lower their death benefit. I always like to point that out because sometimes when you have those living benefit riders on life insurance, they're great to have and they're free until they're activated. Once they're activated, the client sometimes doesn't know what they're going to get, and when they do get the money, their death benefit is going to be lowered. And it's usually lowered larger than the amount of money that they receive. So with ours, it is additional cost, but they know exactly what they're going to get. And for you as an agent, it's a great opportunity for you to earn more commission because if you're going to write them a policy of life insurance, let's say a $500,000 death benefit life insurance policy, it's $100 a month. You start adding the critical illness rider, the disability rider, maybe that $100 goes up to $150. So you're making, almost twice as much or, 50% more money on that individual because you're giving them additional coverage because of those riders. And they know exactly what they're going to get. And with that disability income rider, it's a 2-year benefit, 90-day elimination, but it's a true monthly disability up to $3,000 a month. So great riders.
Yeah, I was just going to say what's really unique and special about our term product is this flexibility with the optional riders. And as Brandon's mentioning with that critical illness, there are other critical illness riders out in the market, but not only do they reduce the face amount, in one situation, if you make a claim, they'll actually terminate the term policy so the death benefit is gone. So we really do take a lot of pride in how flexible this product is and just how much it can do for you and your clients if you're taking the consultative approach.
Exactly. So the next product is our whole life product. And with our whole life, this is one of our newer products that we introduced to the market. I think last year, depending on where you're located out in California, I think it was earlier this year. But with our whole life, we did make some changes to it. We added some short pay options, and just like on our term, you can see there the issue ages are 15 to 69. Usually it goes up to age 85, but because of COVID, a max issue age of 69 right now. But so we go 10-year, 20-year, and pay for life. And then we have that to age 65 option, really good to supplement that retirement for those 265 options, just because at 65 is usually the time when individuals stop working, and that policy you will not owe any more money on that policy. Maybe take some loans out, withdrawals out from the policy. Great option for that. And then for that face amount, we go down to $10,000 for all issue ages. In fact, we can even do a preferred plus on a $10,000 policy, so we can get those preferred rates on those lower death benefits. And it has accelerated underwriting built into this product as well. A little bit lower benefits available. You can see here for clients 17 and younger, we go up to $300,000, $200,000 for those clients 45 to 18, and then it does lower for 46 to 60 to $150,000. But one area I do always like to point out is from 61, and like I said before, usually it's to age 85, but right now it's 69. We can go up to $100,000 on a non-medical basis. So once COVID is over, hopefully soon, so we can all get back to going to football games and sporting events, which I prefer to do, you'll be able to do a $100,000 policy on an 85-year-old without an exam. So it's a pretty nice option to have for them. You see those underwriting classes, it's usually 1885 is preferred plus. And then for those younger ages, we have a juvenile class. We do have an accelerated death benefit rider that is built into the policy. It is a terminal and chronic illness rider that you can add. So it's a 101G rider that is a great benefit that does not require a permanent confinement to pay out that chronic illness on that. So now looking at the riders we have available, you can see here on the accelerated death benefit or accidental death benefit rider, but just like before, we have that critical illness rider you can add to it. It is additional cost just like before, but you know exactly what you're going to get, just like you do on the term. So it's a nice benefit to have. We also have those paid up addition riders. So if you want to max fund this policy, it does a great job of overfunding it, like I said before, for supplementing retirement. Or you have those short pay options, the 10 pays and 20 pays. You want to maybe really increase the premium on those, you can do that. One area we do see a lot of business written on too is on children because of our guarantee insurability rider. It's a way to give them that insurability later on in life without any proof of insurance. One thing that's unique about ours is you just have to have the policy for 2 years, then you can activate that rider. So you can purchase a policy when the child's 0. After 2 years, they can increase that death benefit by $50,000. Most companies, you have to wait till they're at least 25 to activate that rider. Ours just has to have 2 years option between each of those. You can do that up to 5 times. So nice benefit. Also, we're talking about supplementing some life insurance for companies that aren't offering this. Having that term rider you can add to it helps lower that cost, and then that can be convertible later on. So really good option for that. Anything else to add to that, Tim?
No, I think we'll go ahead and keep moving, and we'll look at the Universal Life product highlights.
Perfect. So Universal Life, this is our newest of all of our products. So this one also came out earlier this year. Issue ages, max age of 69, obviously because of COVID, usually goes up to age 85. Face amount, it does go all the way down to $25,000 in death benefit, which is a nice option for a Universal Life policy. Not a whole lot of policies go that low for UL. It's a really good option. It is a current assumption UL, but it does have some nice guarantees built into it as well. It does have non-med limits. It's just like our whole life on those non-med limits. It is a true non-med, so it's not on our accelerated underwriting platform. So it's just a true non-med option. It works just like before, and just like on our whole life. For an 85-year-old, they can get up to $100,000 on a non-medical basis once COVID is over. Just like on those underwriting classes, go preferred plus, all the way down to standards, we have that juvenile rate. We do have a 2% guarantee rate on our guaranteed side. And then we also have a couple of nice options that are really good for the policy not lapsing and individuals getting their money back after 20 years. So we have the premium protection period. So on that one, it is guaranteed out for 20 years on our policies, and up to age 60. Then once you start to getting to above age 60, it lowers about 1 year. After that, up to age 82, and at age 82, you got a 5-year guarantee. So it is not a guarantee UL, but it has some nice guaranteed options built in for a 60-year-old buying this. By the time they're 80, it's guaranteed. And we also have an enhanced guarantee surrender value. What that is, as long as you're paying your target premium on this policy, after 20 years, you can actually get 100% of your money back if you decide you don't want the policy any longer. So yeah, that's essentially a return of premium option after 20 years. So, you're looking at this, comparing it to, term, whole life, and UL. This one's a good option because it's going to be lower cost than whole life, higher cost than term, but it also has that return of premium option in there if you decide that they don't want the policy later on in life. Have some nice riders you can add to it, just like on our whole life and our term. You have that critical illness rider, which I always think is very important. Have that guarantee insurability rider, and then those term options as well to keep that cost even lower for your client. And it does have that included accelerated death benefit rider, just like on our whole life. It has that terminal illness, 12 months or less to live, and that chronic illness, that 101G rider, where you can get up to $500,000 out of the policy as long as they are not able to do 2 of 6 ADLs. And it's not a permanent confinement as long as they aren't able to do those 2 of 6 ADLs for 90 consecutive days. So nice riders to have. Those are built in, but then you have those other riders you can add to the policy. So looking back at all those policies on there, you look at the best option, or lowest cost option term, whole life might be a little more expensive, but you have those guarantees built in, the guaranteed for life and the UL. It has those longer guarantees, but it's going to be lower cost than whole life, and it has those nice options with the return of premium. Now I'm going to give it back to Tim here. He's going to talk about a couple sales ideas that you guys can present to in the field.
Yeah, thanks, Brandon. So, how does this all tie together? We wanted to help paint a picture, and rather than kind of jumping around, we thought the best idea would be to take a single persona. In this case, we have Julie, who is a 42-year-old single mom. She works as an office manager, and she recently switched jobs. And what we want to do is kind of tie in this idea of what's going on from a trends perspective, and then look at some of the products that we have and think about just how that can be brought together to provide really unique, meaningful solutions. So here we are. We've got a single mom, changed jobs recently. She's an office manager. Her new employer, however, no longer offers employer-paid group insurance or any disability benefits due to the rising cost of healthcare coverage that we talked about. The group life and disability coverage at her old job was good, but unfortunately, it wasn't portable. So this is a very real scenario that people are going to find themselves in today. And so how do we look at the 3 solutions that we can use to help Julie? First, we'll start out by looking at term life insurance. So if Julie is thinking, hey, listen, I know it's important. I'm a single mom. I've got children. I want to make sure that I've got coverage in place that can protect them if anything were to happen to me. What should I do? What can I consider? For her, she felt $100,000 of a 20-year level term benefit would be good. Why? Well, she's 42. We talked about that before. This would get her close to her retirement age. It should see the kids through college. But she also realizes that it might be important to protect the insurability of her children. So she wants to carry coverage on them. She chooses to add the children's term rider. While it goes up to $25,000, she's decided that $20,000 was the right fit for her. And then, again, the new employer doesn't have disability benefits. So she's thinking, how can I leverage a product like this to take advantage of any disability circumstances that come up? Well, there is the waiver of premium rider. It's based on, if eligible, it would provide a waiver for the policy's premiums and the rider premiums related to a total disability that would last at least 6 months. So she feels it's appropriate after talking to her agent to add that in. And then also she wanted to think about, if she is disabled, how does she maintain the household? If she's not able to work as a single mother, what can she do? Well, this term product, as Brandon showed earlier, does have a monthly disability income rider. There is a factor associated with it, but what she's chosen to do here is to take a $1,500 per month benefit. She feels that's enough to cover her monthly mortgage, her utilities, and her groceries. And this would be available to her as a monthly benefit after the elimination period has been satisfied if she became disabled. So it's a 2-year benefit period, and there's a 90-day elimination period. So for that comprehensive plan that kind of offsets what the employer is no longer providing, we're talking about $80.92 per month, okay? And we believe that's a really good solution, again, helping her at age 42 to get through or closer to retirement age. And what if, however, she decides that she's interested in making sure children are never burdened with funeral expenses? She may opt to purchase a smaller death benefit using a permanent product, in this case, the whole life insurance, and we'll look at the universal life next. But what's important here is this is very similar in premium. So for about $6 more a month, Julie can have a permanent product, and it's a whole life product that is a participating product, right? So there are dividend options that she could take advantage of. And this, as you see, is for $80.92 a month. This product does not have the disability income rider, but what it does allow her to do is to still maintain coverage on her children at that stated $20,000 and include that waiver of premium rider. that would cover in the event of a total disability, 6 months sustained, of waiving the premium on the policy as well as the rider cost. But again, very affordable, $86.48 a month. Now, what if, however, Julie decides that she likes the idea of permanent insurance, but she wants a little bit more flexibility? Well, that's where the universal life policy can come in. This, again, is a $50,000 death benefit. It has the accelerated death benefit rider that includes that chronic and terminal illness component that Brandon highlighted. And we maintain the children's rider and that waiver of premium. Now, what you see here, as opposed to the whole life policy, which was $86.48 a month, it's essentially $20 less, $250 more a year that she might be able to save and have that flexibility with the premiums. But it would be $66.57 a month. So we felt it was appropriate to kind of look here and say, let's take a person who could be faced in this world. You know, she realizes that insurance is more important now. She's ready to get coverage. She wants to keep it. However, she's had to change jobs, and the employer has impacted that ability to take advantage of group life and disability. So she's had to go out and seek it on her own. And yet all of these are very affordable, and they provide expanded coverage just beyond just the death benefit. Again, she's in each situation been able to provide coverage for children, protecting their insurability. She's got a disability factor here with the waiver of premium. And in the first situation with the term, she was able to include the monthly income to help, supplement her income in the event of a disability to maintain the mortgage, the groceries, and the utilities.
Great sales ideas there, Tim. And obviously with those, you talk about the term. Right now that is, a product that is growing in the industry because of the flexibility of having the conversion options, the low cost, and with our product it's the one that you can purchase up to $500,000 on a non-medical basis and get that instant decision. So with that, I want to give you the options that you can write these policies. So for term, you have the e-application, where that's the probably the best way to take this policy because you can get that instant decision. You have the tel app where it bypasses all the health questions on that tel app, and our home office employees, we have a team that will actually call the client and ask those health questions for you. You have that option. You have the traditional paper option. We do accept DocuSign availability, and then all these still have the possibility of that instant decision. With the e-application, that's when you're going to know the quickest because we'll notify you right away when it's approved. But on the tele app, the paper app, and the DocuSign option, you still have that ability to get that instant decision once we get it here in the home office. On whole life, you have the e-app. You have that instant decision possibility with that as well within those guidelines. You have the paper app, and then also we allow DocuSign with that product as well and the instant decision. And then for universal life, right now we just have it on the paper application, so still a good option to use with that. We do have some nice tools that you can use. We do have a social post that you can use that use on LinkedIn or whatever social network you use for that. So we have a great option for that. We also have a mobile quoter or a quick online quoter you can use that does not require access to our website. You can write that down there. It's myquote.assurity.com/termlife. Not only will it have term, we'll have our disability product, we'll have our critical illness, our AxiFlex, and then, like I said, our DI. So nice mobile quoter, use on your cell phone, on a tablet, on your computer, really nice option for you. And then last, we have some nice podcasts. Podcasts are very popular right now, really, because if you're, on the road, it's something you can listen to, and nothing's better than listening to an individual that, has been successful in your industry, figuring out what they do. It's kind of a copycat world. It's like that in sports. It's like that in life. So if someone's successful doing something, it's always great to hear how they're doing it. So we, interview a lot of, professionals in this industry on exactly what they're doing to be successful. So great options for you.
Thank you, Brandon. And we want to be respectful of time. We know we're here at about 11:30 Central, 12:30 Eastern. We do want to share with you here, this is our regional sales team It's color coordinated. We've got the toll-free number highlighted. It's 1-800-276-7619. Individuals are listed with their extensions by region. So if you have more questions related to the products, whatnot, please let us know. I'm going to keep this slide up. The next slide really just kind of gets to the point here. I'll show you real quick questions, right? But while we're talking about some of the questions, I'm going to leave the contact information up so you can see it. And then here I may back up to Brandon's as well, so you can write down the quoter information as well as the podcast as well. Brandon, I'll let you take a look there at questions. I did have one that came in to me. I was asked, as it relates to the whole life, with the chronic illness option, how much can be accelerated? I know you quickly mentioned up to $500,000. So in any 12-month period, eligible proceeds may be accelerated up to the amount of the annualized per diem limitation established by the IRS, or again, and all total of all benefits must not exceed more than the $500,000 that you mentioned, and at least $10,000 of a face amount must remain in the policy. Brandon, did you have some questions there?
Yeah. So I had one that came up on the ROP on the term. So with the term product, they want to know how much money is given back on the return of premium rider. They get all the premium. So with our term ROP, the client will receive their ROP benefit amount plus their base benefit amount back to them minus the policy fee. So if you end up adding a critical illness rider, that amount is not returned to the client, just the base benefit and the ROP minus the policy fee, which is $70 a year. So still get a majority of their benefit back, but that question did come up.
I have another one here relates to the UL. It asks, does the universal life policy have an overloan protection built into the product? Yes, it does. We have an overloan protection benefit. It's built into the policy to prevent the policy from lapsing due to the excessive loans. To exercise the benefit, a request would just need to be sent into Assurity in writing to convert the policy to a guaranteed paid-up life insurance policy. And it looks like I got one other one here, Brandon. It's actually along the line of term. It says, how does Assurity's term product do with smoking rates? Here's what I would just share. We have found and are consistently told from the field that our term smoking rates are some of the best actually in that space and very highly competitive. Brandon, do you have any additional questions?
Yep. I got one more here. Looks like on the whole life, we want to know if the short pay options were modified endowment contracts or MECs. So on our whole life, the 10 pay is usually going to be a MEC or modified endowment contract. The 20 pay can be sometimes. The reason for that is we're putting a lot of premium into those policies early on. But there's options where you can make them non-MECs for that if you just do our traditional pay or pay for life, then overfund it over 10 years and do that reduced pay option at year 10. But with those 10 pays, a lot of times what people buy those for, they're worried about the death benefit. Death benefit, and MECs are still going to be tax-free. Just anything you take out of the policy can be taxable above the amount you're putting in.
If you have asked some questions and we have not specifically addressed them, we will make sure that we get with you separately here after the webinar to address those specifically. And Brandon, do you have any others, or were you able to kind of see?
Nope. I think that's it. But yeah, like Tim said, if we weren't able to answer questions, we'll have someone reach out to you and answer those for you for sure when we're doing our follow-ups from the webinar. But we appreciate everyone's time today. I know a little over 30 minutes, but hopefully got some good information from today's webinar.
Yeah, and we do hope that you continue to carry the message forward. I mean, obviously, with September being Life Insurance Awareness Month, and you investing the time with us today, you're out there and you're addressing concerns of your clients. But do know that they're thinking about it, they're searching for it, and it's if they're not bringing it up to you, you should at least bring it up with them. Again, thanks everyone for your time today. We do see it as an investment. We appreciate you very much. And let us know if there's anything more we can do to help you. Thank you so much.